the Indian sovereign bonds, the government securities that the Finance Ministry and the Reserve Bank of India issue in tandem will be included in the JP Morgan Global Bond Index. So, Mr. Yadav will be a true global bond manager because he will be now looking at the JP Morgan Index. Sandeep, two things. How does that change the Indian bond landscape, and how does that look to get money into India over the longer term? These days, we've been conditioned to being brought up on FDI money and FII money. This is going to be the beginning of global bond money coming into India. How will lives change for fund managers such as you and for the Indian macro balance sheet?
Sure. I think I'll just start by giving a primer on what historically has been the foreign inflows in Indian debt. India used to have decent foreign inflows before 2013, if I recollect right.
Yes.
And but for the last 10 years, that those inflows have really petered down. India has had one of the lowest ownership of Indian bonds by foreigners. Last year, it was one of the lowest numbers. Now, in such a scenario where Indian bonds are generally were not liked so much by the foreigners, suddenly JP Morgan Bond Index means that around $25 billion of money will come in the next 10 months, which is a significant amount of number. So yes, it's very good. It's very good for bonds. Indian government is not going to issue that much of bonds because, as you very nicely pointed out, India's fiscal deficit is not so high. India will not issue so much bond. There will be a lot of demand. Now the second part is this is very good for India. This year we are going to see drop in yields, and we don't know how much, but it could be really sharp later on in the next going into next year. But there's a second part to it, and the second part is when this JP Morgan bond index inclusion inflow ends after 1 year, then probably next year may not be that good, and that may be the end of the sugar rush. This is the way I look at it. So we might see a little bit of volatility, but this money is here to stay. The money that comes,
Yes.
$25 billion, is not a hot money. It's not going to go away. It's indexed money. It's a passive money, and unlike the previous monies that India has got in Indian debt, which went away the moment there was a risk, this money is not going to go away. This is here to stay.